Hello and welcome to the Global Forecast from the Economist Intelligence Unit. I'm Tony McMahon, and as ever I'm joined by Robin Bew. Robin, green shoots of recovery. Is that political spin, or are we actually seeing that in reality now?
Well, certainly things are better than they were. I mean, back at the beginning of the year, I think the economy was dropping off a cliff in a number of countries, in the UK and the US particularly, and perhaps a little bit later, January, February, in continental Europe as well. We still think that economies are shrinking, but they're shrinking more slowly, so you can take that as good news if you like. But there's certainly things have improved from where they were, and I think it gives you some sense about the bottom will be reached at some point in the next 3 to 6 months, and we will then start to grow. I guess the open question is how quickly we'll start to grow, and we're still relatively pessimistic about the pace of recovery. But it is clear that the situation at the beginning of the year was terrible, and now it's not quite as bad as that, and as we go forwards we can see that we will reach a trough. So the green shoots that you read about in the data, and I guess the thing that the stock market is anticipating, because you see equity prices moving up, that is real. That's not about what politicians are saying. Things are a bit different from how they were a few months ago, and in that regard a bit better.
So as you've said before, the recovery is likely to be fragile and also with reduced wealth expectations in future.
Yeah, well, I think it's important to remember that the green shoots we're seeing now are just telling us that the economy is shrinking more slowly. So we're not in a recovery yet, we're still actually going down. But you're right, when we do recover, that recovery will be very modest. And I think there's a couple of things we need to keep in mind. The first thing is that growth potential in the longer term has been damaged by this. We've seen a lot of capacity being scrapped, most obviously in the banking sector, but actually in other industries too, because that activity, bits of banking and bits of other sectors, ultimately haven't proved profitable when they're being taken out, which means that growth potential in the longer run is going to be slower. So clearly that damages people's willingness to spend in the longer term. And then, of course, if you look at asset prices, you've seen dramatic falls in the stock market, you've seen big declines in property prices, people feel a lot poorer, and those prices are likely to remain below their peaks for a very long time. And as a result, individuals will want to save more, companies will be reluctant to take on the sort of debt burden that they took on in the past, and all of those things mean that growth, the willingness to spend, is going to be much more modest than perhaps it was in the past.
Incumbent governments have found themselves deeply unpopular in this downturn. Does any hint of an upturn give them any hope for a revival in their fortunes? I'm thinking particularly of the UK.
I think pretty difficult in the UK to see how Labour is going to revive its fortunes. I mean, there's clearly a lot going on in the economy, but there's a lot of additional stuff going on, not least the expenses scandal, which inevitably, although it's smearing every party, most of it sticks on the incumbent, and I think they're really going to struggle. If you look a bit more broadly than that, I think it really depends on how the population believe the government have performed. So whose fault is it we got into this mess, and how well are they performing to get us out again? I think if you look at the UK, I think there is quite a bit of blame attached to the regulatory regime. Well, clearly a lot of people talking about the bankers themselves, but a lot of people talking about policy. And then, of course, because the UK perhaps didn't run a particularly prudent fiscal policy in the run-up to this, it doesn't have the room to manoeuvre that perhaps other countries do now to inject more stimulus into the economy. If you look to other markets, perhaps the population's being a little bit more forgiving is perhaps not the right word, but a little bit more willing to accept that it wasn't the government's fault and that they're doing everything that they can. So I wouldn't say that this is going to lead to a wholesale removal in incumbents, but I think you have to assume, as is the case in most recessions, that a lot of incumbent governments will struggle at the next election, and the UK is clearly part of that.
Is there a danger that if we come out of this recession a little too quickly, that the impetus for reform of the financial system, of regulatory regimes, will essentially be lost?
I think there's always a danger that when the recovery rebounds, that all the lessons that we thought we'd learnt in the downturn quickly get forgotten. Now, I think it's important to remember that quite a bit of action is already going on the regulatory front, both in the international sphere. So you're seeing the G20 talk about changes to the way that they monitor the international banking system, and then locally as well. And again, if you look to the UK, there's clearly a lot of discussion with the FSA about moving away from a light touch regulatory regime to something that's a bit more heavy-handed, and that's already starting to happen. And again, in the US, there's quite a debate, and that debate is actually following through in changes in the way that the industry is regulated, and similarly in Europe. So stuff is already happening. But I think it's right to say that if the recovery was much sharper than certainly than we're expecting, and I think many others are expecting, then some of the impetus would undoubtedly be lost. But I also think it's important to remember that banks are genuinely greatly weakened. I mean, most institutions are either close to insolvent or are insolvent without government support, and that fundamentally changes the game. So even without a regulatory revamp, banks would simply not be able to engage in the sort of activities they were engaging in before. So the world has changed, and pretty much no matter how quickly the economy recovers, we're not going to go back to where we were.
Has there been some surprise at the performance of the Indian and Chinese economies?
Well, I think it's clearly, depends whether the surprise depends on how bad you thought it was going to get. I mean, I think it is important to remember that growth in these economies has slowed dramatically. They haven't gone into recession, and I don't think many commentators ever thought that they would. I mean, if you looked at China, for example, before the crisis, they were growing at 12%. Now, it would have taken a pretty dramatic change in the economy there to take that plus 12 to a negative number. But growth there is effectively halved. And India, similarly, we've seen a very, very sharp slowdown. But I think it is true to say, and a couple of things are happening. People are realising, firstly, that while trade, particularly for China, trade was extremely important, much less so for India, but clearly there was a lot of outsourcing going on, are important stories. These are big domestic economies, and their domestic demand trends can keep going largely regardless of what's happening in the rest of the world. The other thing, and again this is particularly true for China, is the scale of government intervention. And if there's one thing that the Chinese government can do extremely effectively, it is get money into the economy quickly, and we've seen an enormous fiscal injection. And while we would quibble with the design of the package and whether it's proving to be sensible for China in the long run, it's certainly pretty clear that in the short run it's having a dramatic impact, and I think that, of course, is meaning that growth is perhaps not as bad as some people feared, and as a result of that we have modestly revised up our China forecast. But I do think it's important to remember that growth is running at somewhere between a third and half the pace it was before this started, and that's pretty significant. And if you look at other data points in China, the unemployment level, the amount of migrant labour that's had to move back inland, that we suspect will not come back to the coast because the export industry's been hit so hard, they are suffering and suffering pretty severely, and the size of the fiscal package that you've seen is in direct proportion to the scale of the social and economic problems that the government feels that they face. So they certainly haven't got off scot-free.
So better than expected prospects in China and India, but the eurozone, you still think that the outlook is poor?
Yes, and I think if you look around perhaps the developed world, you say you look at America, and in fact if you look at places like China, where they have a big engine of the global economy, one of the things that you have seen in China and America is a pretty dramatic government response. And you haven't really seen something similar in continental Europe. So while there have been fiscal packages in a number of markets, and Germany most obviously, they've been relatively modest in comparison to the size of the downturn, which has been very steep. I mean, if you look at what's going on in the eurozone, they are going to shrink more than the UK, more than the US during the course of 2009. And yet the government response and European Central Bank's response as well has not been as aggressive. Now, when we come out of this in 4 or 5 years' time, it may be that commentators are looking back and saying, well, they were still prudent and that their fiscal position didn't deteriorate as much, and perhaps that's put them in a better long-run situation. But right now, it's not helping. And right now, you're seeing those economies shrink very quickly as a result.
In summary, then, do you think that this will be a recovery felt first by those who arguably got us into this mess in the first place, and lastly by Joe Sixpack?
Well, if you talk about countries, I think it's certainly true to say that the US and the UK are further through this cycle than continental Europe or Latin America or Asia. So the markets that perhaps are most closely associated with the problems, they're coming through more quickly. So America, we expect growth there to be pretty modest, but better than in many other markets. And the UK is also moving through more quickly, Europe lagging behind. It's interesting if you look at sectors, of course, that one of the things we're seeing in the equity market right now is some of the really bombed out sectors such as banking, such as construction, have been behind the rallies in equity prices, and that of course is leading perhaps to the other facet of the point you're making, which is not just about markets, it could be about industries as well. You know, banking stocks have gained quite significantly. We think that's a mistake, and that makes us a bit dubious about the durability of this rally in equity markets. We believe that those sectors, construction and banking, which really got us into this problem, have a lot of very significant issues which are going to take a long time to work out, and as a result of that we don't see prospects for those industries being very rosy in the longer term. So perhaps some of the stuff that's going on in equity prices right now is going to prove to be a bit transitory. But if you look at economies, the ones that went in first pulled the fiscal and monetary policy levers the hardest, earliest, and as a result they're probably going to come out of this more rapidly. So that's the UK and the US. But the sectors that got hammered, I think the prospects there are going to remain difficult for a long time.